Joining. As I always start off by saying thank you for those that keep coming back to these daily conversations. I don't really take a break from these types of spaces. I'm particularly excited for this conversation, given that my right eye on Twitter is that of lumber, and Stinson Dean is really in the weeds, for lack of a better analogy, when it comes to lumber. My name is Michael Guyad, publisher of the Lead Lag Report. Join me for the hour. Stinson Dean, who some of you may have seen doing the media rounds, given his expertise in the lumber trading side of things. Stinson, for those who are not familiar with your background, introduce yourself. Who are you? How'd you get involved in trading lumber, and what are you doing now?
Sure. Yeah, thanks for having me on. I'm honored to for you to trust me to be on here with your audience. Man, so at its most basic level, I trade physical lumber. We call it cash product. I buy rail cars of lumber. I try to sell it for more than I bought it for, and I use the futures contract to hedge my risk. I'm typically long, so I have downside risk. So I'll be short futures, but depending on market structure, outlook, I can get short on the cash side and then buy futures to kind of offset that short position in the cash markets. So, I run Deacon Lumber. We've been trading lumber since 2018. And it's funny because most folks didn't realize lumber was a volatile commodity until it kind of became the inflation headline in 2021. We set new highs in 2020, and I've been tweeting about lumber for 8 years, to about 400 people. And then all of a sudden, in 2021, it became a thing because lumber really is one of the only commodities that gets to the end user and to the retail customer in its raw form. It's not value add. There's no changes. It's not mixed in with another product. It's not fed to a cow and then it's beef. It's a 2x4 that's priced at commodity pricing. So it's really been an interesting proxy for the general public to follow commodity price inflation.
And I had put out this tweet a bit earlier today that, kind of jokingly on this point that I've seen on Twitter where people kind of criticize the idea of focusing on lumber as a key commodity, that, people think that tracking lumber is a strange concept while they're tweeting from their homes. So let's kind of go with that a little bit because, and I'll chime in a little bit here, but I want you to talk about the importance of lumber. I know that sounds like a strange question, but I think a lot of people really underestimate why lumber is such a crucial commodity for the economy overall because of that link housing.
Yeah, it's extremely sensitive to single-family home starts and housing, which is the main conduit to the American dream and building wealth for the middle class is owning a home. And we clearly don't have enough homes. We've underbuilt for a decade, and this boom and bust type cycle is upon us with home building and then all the inputs that go into homes. And the number one line item on a home is the framing package, the lumber material in particular. The futures contract. There's some updates coming up that I think we'll talk about, which are going to improve liquidity and kind of open it up to more folks who've been maybe observing lumber to actually participate in it. But lumber is so sensitive, almost week to week, to home building. Folks who've been in the lumber industry have been through a lot, from being the epicenter of the Great Recession to the first kind of commodity to go off the rails from an inflation perspective. And you got a lot of very cautious folks. So if they get a hint of a slowdown in 1 week, they dial it back. And these producers, the sawmills, mainly out of Canada, are producing as much as they can every day. And if there's a little bit of a hiccup, our supply chain is so thin, meaning everyone runs a very lean inventory up and down the supply chain, sawmills included. They are not built to store lumber, and the lumber yards that ultimately package it up and send it to a job site for a home builder, they're not really built to store lumber as like a trade. Everyone's hand to mouth, everyone's just in time inventory. So when there's a little bit of a pause in buying, it has immediate ripple effects. You see it in the futures price, you certainly see it in the cash price, and it's very sensitive, arguably, on week to week economic activity when it comes to single family homes. And then vice versa, when folks are busier than they suspected and they're trying to make up for being lean out in their yard, that ripples through and prices skyrocket very quickly. And that's mainly because folks' risk management strategy, and this is important to understand, like you said, the weeds of how lumber works and why that price ultimately reflects economic activity related to single family home building and multifamily. Uh, the everyone runs so lean because that's their risk management strategy as a merchandiser, as a lumber yard, as a home builder, and wholesalers and producers in between in that supply chain. The main risk management strategy is to stay lean and have inventory turns and almost dollar cost average into the volatility. And when that happens and everyone's doing it and there's a hiccup, things go haywire to both sides. And I just think it's a tremendous commodity to watch for kind of a high frequency look into what's going on week to week, month to month in single family home building.
And it's interesting because I've argued that if you really want to get a sort of a real time pulse on the state of housing, you don't do it by looking at Zillow. You simply look at lumber futures to sort of get a sense of that. What's the and this is kind of more from my own knowledge here, but what's the lag time between buying up the lumber and then the actual average construction and use of that lumber? In other words, how long of a lead time is there from lumber purchases to actual execution in home construction?
Yeah, we call it installation. Like how like a 2x4 is produced. Once it's cut and put on a rail car from the producer, it's going to take 3 to 4 weeks for it to get to a lumberyard. And lumberyards are trying to turn their inventory every 30 days. So I'd say 10 weeks or 8 to 10 weeks in a normal market that's moving smoothly and no one's sitting on inventory. Um, maybe let's say 10 to 12 weeks between getting produced and getting installed in a house. But when things slow, I mean, I have some lumber that's 8 months old in my inventory. So it can sit. It makes you nervous because it's not really a commodity that stores particularly well. So you got to keep an eye on it. But there are times when orders up the supply chain are finally shipping while demand has slowed down. So you kind of got this buildup of inventory up the chain, and it can sit for a little while. But typically, 10 weeks or so. Does that answer your question, Mike?
Yeah, no, and because I've made that argument without knowing the exact number for a while that the reason lumber is interesting from the standpoint of telling you a little bit about the future is that there is this long tail in terms of buying it and then actually where it shows up in terms of construction and then of course the construction of the house in terms of what it implies for economic activity.
Right. Well, and the thing to remember with that 10 week, like that's if you just followed a one stick of 2x4 from beginning to end. The agreement to buy that 2x4 happened 2 weeks before that from the lumberyard per se, and the agreement for the lumberyard to sell that to a builder happened potentially 6 weeks prior to that. So a lot of the purchasing, and this is a lot of what I had to explain the past 2 years, is our industry sales cycle. Like we're chronically short. Suppliers are the business model is to sell 60 to 90 days out, but they only own 30 days worth of inventory. So they're chronically short. So that's part of understanding what you're watching in lumber price is if there's a rapid rally, it's typically a short squeeze, which is what happened in 2020, 2021, and early 2022. These were commitments that the price was going up to cover commitments that were made probably the quarter before. So there's an element of folks being short. It got exacerbated by railroad issues and supply chain and labor and all sorts of stuff. But folks that are moving lumber price are always trying to anticipate, what am I going to need? What are my sales folks? What are they selling 90 days out? And then they're trying to buy in to backfill committed sales, if that makes sense.
So I think that's interesting because that goes back to your point about using lumber futures to hedge against the cash side. I've also long argued that lumber is an interesting futures contract in the sense that I'm pretty sure out of all commodity futures, it's the least actively traded. So there are not that many contracts, right, that are turning over. And I've always been of the mindset that the reason that is because it's more based on hedgers as opposed to speculators.
Yeah, for sure. So the cash market is small anyway. The contract is a Canadian SPF, spruce pine fir, 2x4, 8 foot through 20 foot random length carload. And the market for that is as small as it's ever been, like the market share for Canadian spruce 2x4, specifically a Western Canadian spruce. And so the cash market's small to begin with. There's lumber that's traded to Asian markets, but it's kind of a one-off block sale. They're not really in the market every day. But largely, it's just a U.S. and really North American single-family home market product. So it's small anyway. If you look at the Commitment to Traders report, majority of the large entities that have to report as a commercial hedger or report as a trader, non-commercials versus commercials, it's heavily weighted versus commercials. But I can tell you, having been a futures broker, specifically consulting the lumber industry when I got my start in lumber, a lot of those hedgers are hedulating, as we like to say as a consultant anyway. They're Texas hedging, they're long inventory and they're going to long futures. They're short inventory, they're going to short futures on top of it. So there's a lot of speculation that happens on the commercial side anyway. And there's not enough speculators, and that doesn't mean there's not volatility. And that's ultimately what I trade, is the volatility in the futures contract. When the futures contract makes what I call an unfundamental move, it's either ahead of the ball game and it's going to be right, and the cash lumber that I own is going to move to that futures contract, or it's wrong and the futures contract is going to move back in line with fundamentals. Either way, I'm buying the cheap part of that equation and selling the expensive part of that equation, and arbing the two. And the volatility has been immense. And the basis is the technical term for what I trade. And basis is extremely volatile compared to other mature commodities. So when you see the volatility in lumber, it often is commercial hedgers, commercial participants, I should say, chasing the market. Because, and this really goes to answer your question, the cash market is volatile. The cash market is opaque. The cash market is also thin. The cash market bid and ask is often miles apart. The consolidation in the industry from the producer side and the consumer side, the buy side, I should say, has increased volatility to a degree that it makes it very tough to do business, unless you got the cash to pay the margin call or weather out the volatility. Moving forward, they're launching a new contract code LBR that is going to be a truckload size instead of a carload size. So it's 1/4 the current size. It's going to be delivered. It's going to be priced, delivered to Chicago. So now Eastern Canadian mills can participate in the delivery process, where forever, for decades and decades, it's only been Western producers. So that should put a lid on some of the crazy inverts we've had in the calendar spreads. It should put a lid on just upside price, as these Eastern mills, which are gaining more and more market share in the cash markets, as Western Canada, specifically British Columbia, is losing production, losing fiber, shutting down sawmills. It's a long overdue change, which we should see more, honestly, more commercial participants, particularly on the producer side, which then should bring in some more speculators, some more liquidity. The bid ask should tighten up, and you're not taking carload sized risk when this market moves. I think the volatility is going to be pretty similar. but you're taking a truckload's worth of risk instead of a whole carload's worth of risk. So I think it's going to be more speculator friendly from that aspect. It's still physically delivered, like corn and beans and oil, like the other major commodities, but like those, less than 1% go to delivery. So we should see some improvement in liquidity and trading volumes. But at the end of the day, it's a physically settled contract. So those last 2 weeks of the contract, you're really going to get an insight into what's going on in the cash markets.
Yeah, I think that's an interesting point about the distinction between the Eastern mills and the Western mills, and how the smaller contract will bring in some of those Eastern mills in. I do wonder if that implies, because you would have tighter bid-ask spreads, that the message of lumber might be more pure. Because it still sounds like it's going to be still more hedgers, although yes, you'll bring in some speculators, but now you've got sort of more information because more hedgers can access the market.
Yeah, I mean, there's going to be more information to anyone who can look up CME lumber futures, but that same information has always been available to the folks like myself who then trade the lumber futures. Um, so like the commercial participants, there's not going to be new information. I don't think. Maybe I guess more high frequency, but it's like I said, it's a pretty small market, so word travels fast between Eastern and Western markets, who's who and who's pricing lumber cheaper, East or West.
It's interesting to me the timing of this, as there are growing concerns about the deceleration in the housing market. And you had mentioned if it's fundamentally based or not, the lumber prices on the future side, the volatility relative to demand. I'm curious, given how close you are to things, do you think that this very aggressive sell-off off the highs this year, is that reflective of a fundamental change in housing? I mean, obviously, we know mortgage rates have spiked, and that must slow demand down. But how do you view the movement in lumber futures relative to all these concerns around housing?
Yeah, if you look at lumber futures, they topped in March, and if you look at equities and even the commentary coming out of some of those earnings calls, they kind of labeled late Q1 as signs of a change in demand, and it was all. I mean, our industry is scarred and still stays awake at night thinking about mortgage rates in 2008. And if you're around today and you survived 2008, 2009, like you're that much closer to retirement, and you're not going to be putting risk on and thinking you're smarter than the market. And the second the market lines up with high interest rates, high mortgage rates, which I argue the housing market can bear significantly higher mortgage rates than we're giving it credit for. But the folks, running these businesses are not interested in sticking around to find out. So they put the brakes on in March. I think the lumber futures captured very accurately the behavior in lumber consumption, where it just plummeted, and folks were just buying just enough. The way to think about it is, if they were sending 3 trucks out to job sites to get installed into a house, they're buying 2 trucks to replace it. And then now, if they're sending 3 trucks, they're buying 1 truck to replace it. And pretty soon, they're going to be sending out 2 trucks and 1 truck, and maybe not replacing it at all. So everyone's whittling down their inventory. So really, futures from 2021 sell off. And if you look back to, honestly, what prepared me for this market is this. If you look back to the 2018 market, and you look at the 2018 lumber futures chart, and you lop off the last 2 years, that was a very crazy record high price year that got cut by over 50% in the matter of 3 months. We grinded up through the summer, through May. We topped out at the May futures expiration, and then it was over. A couple dead cat bounces on the way down. And if you line that up with mortgage rates were headed up that summer. You look at months supply of homes. It I think went over 7 months, which was the highest we've had in a long time at that point. And those two things will completely halt lumber purchasing and lumber activity. And so fast forward 2021, and then specifically 2022, now we see month supply of homes has skyrocketed. Mortgage rates, we all know that story. And lumber was kind of ahead of all of that in March, saying risk off, we're done. It's been a good run, but we've seen this play out before, so we're just going to pause and let it play out. And hey, we could be wrong, but we'd rather be wrong with risk off and have an opportunity cost versus having risk on and being wrong and losing real money. So I think it's been I think it's been highly correlated to the economic slowdown, specifically in housing, as folks on the front lines who are buying lumber to build the homes that we're all sitting in said risk off. And they've been right. Everything has slowed down since March.
Yeah, and I'm glad this is a good direction to go, because this kind of ties into my world. And the reason I have the lumber and gold eyes in my Twitter picture is because, one, it's kind of poking fun at the laser eyes community with Bitcoin. But in 2015, I put out a paper that won an award from the National Association of Active Investment Managers that basically argued that when you compare lumber relative to gold, it tends to be weak in advance of every single major tail event for equities, every single major crash. So I shared a thread at the top of the nest here, and you can see it, I retweeted it. But you look at 1987, lumber weakened in advance of Black Monday. You look at 1990, weakened in advance of the housing recession, which makes sense in the second half of 1990. The tech wreck, 2000, 2001, 2002, lumber relative to gold weakened in advance of VIX spikes. 2 weeks before Lehman Brothers weakened, right? Lumber was weak in advance. So there are a number of examples. 2011, summer crash. You mentioned 2018. I shared at the top of the nest here how lumber relative to gold behaved in 2018, and it was weak prior to that massive decline in equities. So right now, you mentioned the risk off this year. It's been a risk off environment, you can argue, but part of weakness in lumber, part of that story is that yields tend to drop, right? That mortgage rates tend to also drop when lumber is weak, which makes some sense, because if lumber is weak anticipating a housing slowdown, that means mortgage rates should probably drop as well. The problem is we haven't seen any of that, right? Kind of up is down in this weird environment. Talk about if you've seen or done any work on the connection between lumber prices and Federal Reserve policy and the way the bond market behaves, because to me, it's ultimately all about changes in the demand for money.
Yes. So short answer is I've done no work on the data behind that outside of just because where I add value to the community here in FinTwit and the media is like I see the behaviors, like you're talking about lumber versus gold, risk off, risk on for broader portfolio management. Like I'm seeing the behaviors of the business owners who buy the lumber and what they're thinking about. And, we're all reading headlines and there's an emotional component, but at the end of the day, they're the ones seeing the order flow for home packages, and it has slowed. And whether that's because the home builders also want to take risk off and kind of finish what they got in the pipeline, because we know they got a big backlog and they might not be adding to that. They may be focusing on completions, but so we're seeing what the textbooks and what the theory, or what I see, what the theory hypothesizes. Like I see it in real time in the real world, and it's really interesting. And so the short answer is I can't tell you that I've ever looked at interest rates in lumber specifically. I personally, this cycle, I think lumber has led mortgage rates, has led inflation, government bonds. Because the reality is, in the last 30 days, 30-year mortgages have rolled over.
Exactly right. Yeah, that's where I'm going. Yeah, good. Yeah.
Yep. They could take another leg up, but lumber went down as mortgage rates kept going up, to your point. Now they've rolled over. Lumber had a little dead cat bounce. We're testing the swing lows today, actually. And I think, mortgage rates are going to chase lumber directionally. And I can't tell you if that's always been the case, if lumber typically leads mortgage rates, but my instinct says yes, because as mortgage rates are going up, everyone involved in the lumber industry gets very nervous and starts to think about 2008, really 2006, 2007, and starts going risk off. So my instinct would be lumber price leads yields.
Yeah, no, and I think that the key thing I always point to is there has to be causation with any relationship. So there's clear causation there, because again, mortgage rates are tied to demand for housing. Housing demand is tied to construction. Construction is tied to lumber. So it's all sort of interconnected in that way. Now, oftentimes when people think about lumber, they think about U.S. homes, but lumber is not just not just used for U.S. home construction. It's used globally. Talk about some of the global dynamics. I heard you talk with Bill Brewster. I'm going to have it on a space soon about China and Canada.
Right.
Talk about some of the things that you've seen globally as relates to the lumber markets.
Yeah. So I had a long discussion with Bill on his podcast. It was probably the deepest dive and the most detailed I've gotten into like the 15-year history, really the history of lumber and the dynamics of lumber coming out of the Great Recession. And it all, I think, with most commodities, China pulled a bunch of commodities out of the dumpster post-recession as they had their big infrastructure spend, their big GDP growth, 20% growth, and they were using lumber mainly to form concrete. And we all heard and saw the ghost towns that were going up in anticipation of a rural migration. Lumber was used for the curbs and the roads and the foundations and a lot of the concrete forming. So Canadians are the number one importer of lumber into the US, and we're heavily reliant on them to build homes how we've traditionally built homes. I should say we have always traditionally built homes with Canadian lumber studs and plate. That seems to be shifting some, and we could talk about that. But from a global marketplace, that Canadian spruce has kind of been the workhorse and the bellwether for the lumber market, and that's what the futures contract is. It's a Canadian spruce contract. So the China in particular, Asian markets would suck up a bunch of lumber from Canada. Canada, would quietly Canadian producers would quietly kind of sell that over to Asia and then come back to the US market and say, oh, we're off the market. We've sold all of our inventory. So, order files and lead times are out months suddenly because they made a couple phone calls to China. That has largely ended with China kind of shifting their economy of 6 or 7 years ago away from infrastructure building. And now we saw the implosions of those ghost towns because no one ever moved to them. And I've been tweeting, it's really not my original outlook. I can't take original credit for it, but I think China, particularly their property market, is in big trouble from a deep recession perspective. And when you have a deep recession in a communist country, you could have some pretty serious ramifications. So China has largely been out of the picture since they stopped building out their infrastructure. And you see that in the price of oil, 2014-15. You saw that in lumber, same time frame. But right around then, the U.S. economy started to pick up some steam and snowball and compound and started to make up for some of that lack of China demand. So today, China is nowhere to be found. I think the last time rumor, I don't. These are things don't have firsthand knowledge of. But the last time I heard about China being in buying lumber to a significant degree was the spring of 2021. Lumber kind of weakened for like a month, and then they were able to export a big block out to Asia, and the prices continued to rally for another couple months into May. So since then, nowhere to be found, and it's put some of the producers in a pinch because they can kind of offload volumes there to Asia and then pivot back to the U.S. and say, "Hey, we're out of lumber." They haven't been able to do that. Canadian producers talked a lot about them, and the Canadian domestic market, because of the tariffs, that's the preferred market to sell to. So when things get really, really tight, like we've seen 2021 and early 2022, I mean, literally how it works on the phone is you call the mill and they won't answer your phone call if you are a U.S. buyer, until they've exhausted all their phone calls to the Canadian buyers. And when things are tight, the Canadian buyers are buying everything that's available. And by the time you get your call answered as a U.S. buyer, there's nothing left. Like, you can buy nothing. There's nothing available. And that's solely due to the tariff and the fact that the U.S. is at a disadvantage against other countries to buy lumber. So, but outside of that, I think the Canadians are on. They have different initiatives to try to open up markets in India and Vietnam and other markets to sell their lumber. But Russia is the biggest supplier of lumber over there. And so far, there really hasn't been, outside of rumors and what you would think would be pretty common sense as far as Russian supply decreasing. I don't really think we felt it yet in lumber. Maybe it's because the overall demand is weakened that we haven't really noticed the lack of Russian supply displacing lumber internationally. But it's lumber is a big indicator for China. But after that, it's a big North American commodity.
I want to go to this point you mentioned, Stinson, around the buyers. How fragmented is the sawmill side of the industry? Are there a few players? Are there a lot of players? Talk about some of the dynamics on the industry there.
The producer side, I'm sorry.
Yeah, more right. The producer side, which would be, I guess, the sawmill side,
Yeah.
right? Right.
Yeah. So sawmill. So our dependence on Canadian lumber is an important part to facet to understand kind of how we got to where we are today. So Canadian lumber producers have been consolidating really since the Great Recession. And there's 4 or 5 major producers in Canada that largely dictate the sale price of a 2x4. There's more competition, mom and pop, I call mom and pop, but independently owned lumber producers in the East. And I think having this futures contract include Eastern producers is going to help keep a lid on some of the outrageous moves we saw in lumber futures. But it's consolidated, I would argue, too consolidated for the health of the market. It doesn't mean, and because I argue with folks in my industry a lot because they think it's a cartel and they price fix and all these things, just kind of rumblings, nothing serious, kind of complaining, victim mentality kind of thing. But the reality is they don't, clearly. They would, if they did, they're terrible at it as far as managing market prices. There's not a lot of discipline in lumber producing, and the consolidation has bred more volatility. I was brought up by lumber traders that could make, I don't know, 100 phone calls on the sell side, figure out, hey, what are you selling 2x4s at today? How much you got? Blah, blah, blah. That's 100 data points. And then hundreds and hundreds on the buy side, figuring out what people are willing to pay. In between hundreds of phone calls, you can find people who are displaced and they're not on top of the market. And you can find a producer that's selling below the market, a buyer who's buying above the market, and stand in between and make a nice little profit as a broker, taking virtually no risk, definitely no price risk. Well, now there's like 5 phone calls you can make. And like I said earlier, they might not answer the phone. So it's much harder for price discovery, price transparency on the cash side than it's been definitely pre 2008. I know you didn't ask about it, but the buy side has now become, in the last 5 years, a kick, an extra driver in volatility, because now you can't call hundreds of independently owned, family owned lumber yards. They've all been bought or sold or shut down. And there's like 4 buyers that are dictating, and they definitely don't answer the phone. So you got 4 or 5 sellers, 4 or 5 buyers with a bid and an ask super wide, and they're just staring at each other until someone blinks, and then everyone else has to chase the market, either hitting the bid or hitting the ask. And that's where this volatility comes from, the cash market, which ultimately bleeds over to the futures market. And I make a living standing in between the 5 sellers and the 5 buyers, but there's room for some kind of price competition in there. The only hope, and it's manifesting, is southern U.S. production coming in and disrupting Canadian market share, and that's been happening. I was kind of a believer that it would never happen, but I also didn't think we would see a $500 per thousand difference between a Canadian spruce and a U.S. Southern Yellow Pine price for $500.
Sorry, and that just has to do the type of tree or type of wood. What's
Species.
when you say?
Yeah, it's a species difference. So the Southern Yellow Pine tree is grown in the U.S. South versus Canadian spruce. The Southern Yellow Pine tree it's damn near a hardwood. It's heavy, it's wet, it twists, it bends, it doesn't dry completely until it's behind a wall. Then it might start to dry and then warp. And it's hard on your saws. It's hard to carry. It's hard on your nails. Where Canadian spruce is this beautiful stick of lumber that has all the strength qualities you need for a single family home. It's straight, it's light, it's pliable, it's preferred, especially for production builders. So the question is, talk about the producer fragmentation or lack thereof. There hasn't been a disruption there until this volatility in price has caused people to rethink, can I make Southern Yellow Pine work? And I think folks have found it's good enough to stand a wall up. I think maybe we'll find out in 2 years if it warps or not. We're not there yet. But the short answer is we're very volatile in lumber futures and cash market because we have a handful of producers and a handful of consumers that are always having a big standoff. Who's going to blink and cross the line to hit the bid or hit the ask?
I want to go back to the discussion around tariffs for a moment, because well, first of all, in terms of lumber prices and the ability of home builders to pass that down to consumers, how much is it easy to kind of make the price of a home more expensive just because lumber is more expensive? In other words, is there a give up of margin at all based on lumber prices? Presumably, at some point there is, but how does that factor into actual home price?
Yeah, it makes a lot of headlines, but the reality is the home builders, publicly traded home builders, which I think have it's obvious to say they have a distinct advantage because of their size and scale and consolidation over the years over your small custom home builder, regional home builder. The custom home builders' profit margin, they reported expanded in the same time frame as lumber quadrupling and then some. So it did not eat away at their margins at all. In fact, it kind of gave them cover to maybe raise prices more aggressively when they can point to lumber prices. As far as the tariff, it's two things. When lumber's tight, I explained before, Canadian producers should have to pay a 20% tax to sell it into the U.S. They're going to sell to any market other than the U.S. first. So Canadian, local, their domestic markets are going to get first look. Asian markets are going to get first look. And then the U.S. markets are going to get it. And the Canadian markets and the Asian markets get a 20% discount. They just gotta be 19%, and they're going to sell to them versus having to pay the 20% tariff to sell to us. So it becomes a headache when just sourcing lumber to keep the machine moving in our economy to build a home. Where I think it has more of an impact is to the downside, which we're at or below break evens right now. If you look at the lumber futures price, the tariff does not allow lumber to go lower. It doesn't get cheaper because break evens are 20% higher naturally. They got to pay this 20% tariff to sell. And if the tariff wasn't there, that kind of pain point would be 20% lower than it is today. So lumber doesn't get as cheap as it could if the tariff wasn't there, on top of kind of these knock-on effects of the uncertainty of the tariff and the investment in Canadian production when you got to account for a tariff and the volatility application of the tariff. It's no good. It's no good for the American home buyer, consumer, home builder, everyone in between. I really don't know who it is good for, because it's not unheard of for the Canadians to just get all of their money back after appealing to the WTO a decade later with interest. But it's been a thing for 35 years. It's not new. It's not a Trump thing. But it's a pain for everyone. And I think right now on the lower end of prices is really where it shows up, because prices could go lower because that break even point should be lower if we didn't have the tariff.
So that's interesting, that point about the cover by the home builders on pricing, because where I was going with that was, if tariffs might be an effective tool at slowing down housing construction than interest rate policy, right? Because if you make the price of a key component to housing construction a lot higher because of tariff, now you simply can't build as much.
I mean, yes, home builder, and I'm not home building is very well covered by very smart people. So I don't spend a lot of time on it, but I just know that lumber prices went way up and profit margins on a percentage basis went up above and beyond lumber price increases. So it wasn't a problem um, for them. Now, can you argue that? No, I mean, I was about to say, can you argue that, hey, if the tariff wasn't there, we'd have cheaper lumber. We could maybe build at a lower price point to house people that can't afford $400,000 homes. But when price is going up, that tariff getting removed does not mean a 20% decrease in price overnight. It has bigger impact on pricing on the downside than the upside. The upside is happening because people desperately need lumber as much as possible, as quickly as they can. And relieving the tariff, in my opinion, would not have stopped any price rally that we had on its face. Now, if we had removed the tariff, and could it have spurred more investment over the years because they're not, maybe there's more production, I doubt, but maybe there's more production, maybe more investment and efficiencies in Canada. But on its face, in these short squeeze bull markets, people just don't, they're just not going to give you a 20% discount because all of a sudden they don't have to pay the tariff. They're people are bidding it up. It's more on the sell side. When things go down, does that tariff show up? So I've covered a lot of ground there, Mike. I don't know if that answered your question, but the tariff itself would not, in my opinion, reduce the price of lumber during the bull runs. To me, it does reduce the price of lumber on the corrections.
Yeah, no, that makes sense. One of the things I've had people ask me when it comes to the lumber to gold relationship is what could disrupt, lumber as a key component to housing construction. And my response is always that, well, who knows, maybe there's some polymer or some kind of new mixture of things, right, that suddenly makes lumber not as good. There's some competition for lumber on the framing side. I'm just curious, is there anything that you've seen or noted that would provide some competition to lumber as a key driver of framing and home construction?
Short answer is no, nothing new, nothing that's been in development. Like the closest thing we had when I'm thinking about alleviating the housing shortage was offsite construction, which still uses lumber, but that really hasn't been able to get figured out in the last 10 years. By the time we get something figured out, 3D printed homes is always the sexy headline. They kind of squirt concrete and make a block home. You're talking about a pretty fundamental change in how American homes are, what's acceptable, I should say, to an American home buyer, and what they can make out of these 3D printed homes is not there, from what I can tell. So no, short answer is no. And I think by the time there is something, it'll be not needed. Like we won't need that many homes anymore in 10 years. So nothing. I think what folks need to, it's the flip side of that. It's what international demand for lumber will these producers be able to open markets in other emerging economies and convince them to stick frame, maybe mass timber. If you look up mass timber, it's a steel competitor for high-rise buildings. So really, the technology that's matured is to use more lumber, and then this threat of new markets versus anything that's on the radar that could potentially displace lumber to build American homes.
I want to go back to Russia for a moment because that's something I had not heard about. Because oftentimes when the media talks about Russia, they're talking about wheat and fertilizer with the war going on in Ukraine. That point you mentioned earlier about Russia and lumber is an interesting one. You said it's important for the lumber market, but are there any kind of numbers you can put around that in terms of how much what percentage of lumber from Russia goes to Europe or goes to the U.S. or whatever it would be?
Unfortunately, no. I've never thought about Russian lumber ever until a few months ago. So, because it's not used in the U.S., it can't come over here. It's not. It doesn't have the grading and the chain of custody. You can't use it over here. But China is the number one buyer of Russian lumber, And if they're not buying Russian lumber, they're going to have to pivot to Canada. I have known that for a while, but so short answer is no. There's folks that I can kind of tweet out later that would have a better perspective, particularly folks from Random Lengths publication. That's kind of the industry standard for market outlooks and formal lumber research, fundamental research. So no, I can't. But and I don't trade any Russian lumber. There's Russian plywood and then panels that find their way over here. That it sounds like some of the embargoes are just now taking effect, but it kind of doesn't matter because we don't need all that stuff anymore. So I can't really speak specifically to much of it.
Stinson, for those that want to maybe learn about the lumber markets in general, whether it's trading lumber or not, I'm just curious, what suggestions would you have in terms of how somebody gets to understand the market beyond just looking at a chart? How did you yourself kind of self-educate?
Yeah, man, I've gotten that question a lot over the past 2 years, and unfortunately, there's no easy answer. The RISI, RISI runs a publication called Random Links, which has kind of been the industry standard for spot market pricing and commentary for decades. I would start there, kind of track like real niche lumber fundamentals. There's several folks on Twitter, myself and others that put out some good frontline kind of happenings and lumber price and lumber action. Lumber's been pretty boring lately, so I haven't been tweeting too much about it. But it's one of those things. There's not a book. If you're interested in having a career in lumber, you kind of gotta get an entry level trading position at one of the trading operations. I can point you in the right direction there. But as far as just learning it, observing it, and understanding the things that we understand between several of the podcasts that are out there as lumber's become headlines like that, I think as lumber has been in the headlines, myself and several of my counterparts, very smart folks in the industry, have done a lot of media. So there's probably more knowledge available for niche lumber stuff, from producer to buying behavior to how it gets on the rail line to how it gets unloaded to sales models. And it really pulled back the curtain. I would start with the podcast and the articles and reach out on Twitter and find out who to follow, because there's no book, there's no YouTube video. It's not a very sexy thing to know about until recently. So it's kind of like you said, self-taught. And I certainly can point people in the right direction if they shoot me a message.
Very good. Thank you, everybody, again for joining. I'll do another space tomorrow. Stinson, first time you and I are speaking. I really do appreciate the knowledge that you brought here for the hour, and everybody enjoy the rest of your day. Thank you, Stinson.
Thank you. See you later.
Cheers.